Good morning, ladies and gentlemen, everybody. Welcome back to today's stream. Sorry, I wasn't here the past couple days. Again, was actually down in Florida for a grandparents' wedding. Or, well, a grandparents' wedding. And yeah, my travel computer that I would normally work on broke, so didn't really have the proper equipment for this trip I was on to do streaming. Well, anywhooser, welcome back. Welcome back. The market's currently on the positive side of trend right now, but that doesn't mean it's going to last for forever. Let me double check volatility this morning. Volatility is broken down, so in theory the markets aren't very fearful for the moment. Yeah, we're just gonna have to. I mean, basically, what's gonna happen today, or just in general, is if the market maintains over the price of 684.40, then the market will not really sell off and will continue higher, and or just it's really just about not changing structure. Right now, we're on the positive side in the pre-market, but again, the market will have to maintain over that price in order to basically sustain today. I got a feeling it's going to be a super duper busy YouTube stream here today. funny. That's good stuff. Good morning to random beautiful people. Love you. Sorry I wasn't on the past couple days. The travel computer was broken, so couldn't really work efficiently. Streaming, I mean, I have another laptop, but even that one was freezing, but I fixed that. But that one's not strong enough to do what we got to do every day. And all the programs I have to look at and all the things that I have to look at, it just wouldn't work. You know what? I think I'm going to try to add a little ticker. Well, not a ticker, but yeah, I'm going to add a scroll bar to our YouTube stream here. So I'm going to try something a little different today. It's been so long since I've done this. I might have to wait on that or mess something up. Yeah, so market's just on the positive side. Yeah, I mean, you had what, FOMC come out, or FOMC come out, yeah, FOMC yesterday. Looks like they're not going to cut rates or raise rates. They're going to leave it unchanged. Basically means things aren't doing so good. That's what that's how I see that personally, is things aren't going so great. They can't afford to risk any more runaway inflation that's already happening in a way. When I say runaway, it's more or less they're just, I mean, they haven't really gotten inflation down to their target. I mean, who really expected them to do that? And then obviously you can just see prices have never really stopped going up ever. And then even since COVID, it's kind of accelerated in many other areas. So yeah, we just got basically, we're just inflating our money away currently at a faster pace. They don't want to do it even faster, so they're going to not lower rates right now is the way I'd see that. And the economy is not strong enough, and the jobs markets aren't strong enough, and people's pockets aren't strong enough to have interest rates elevated as high as they were years back, if you will, or what have you. So basically in between a rock and a hard place, which is the economy is not strong enough to sustain a higher interest rate economy, yet we have too much persistent inflation to keep lowering it for the moment. So the old cat and mouse game is what's going on, which is everything anyone with half a brain has always expected pretty much since COVID. And because it's just obvious. I mean, that's just literally, it's just the nature of the business. That's the nature of the beast, It's just like, I mean, really just like anything in life. Any job you do, there's going to be pros and there's going to be cons, and then there's going to be ways to hopefully better manage your outcome, right? And so every job on planet Earth pretty much has the same thing going on to some degree. And this is just what the Federal Reserve and what our economy and what our system has to face ongoing when you have a system that can and does change interest rates to try to help move the needle of our economy and financial system in one direction or the other. This is what we get. So I guess, yeah, it just is what it is. It's not like you're gonna wake up and be out of it. It's not like you can just say, oh, well, I don't want to be a part of it anymore. It just is what it is. So I don't expect things to really get better myself. The only reason I say that is because I feel like since I've grown up enough, I've just seen a pretty consistent pattern and or trend, and that's pretty much just that. Things are going to get a little bit more expensive, probably continue to get more expensive until something dramatic changes, and I don't know what or when that would be. But yeah, good morning. So yeah, the market's on the positive side right now, so we're not really bearish the market right now. For short term, yeah, the environment of the market is in the short term more. eh, I don't know, dude. It's just on the positive side. That's all I can say. Markets will do exactly whatever they want when they want. But yeah, we had FOMC come out. Boom, market up. Okay, I think we got jobs numbers coming out today. Whatever. But right now we're on the positive side, so that pretty much just means the market is more inclined to go up since we're above, right? And if we're down, it would be easier to create lower highs and go down. So that's pretty much how you view the market right now. You'd be on the bullish trending side until stated otherwise, right? So if you just kind of look at it, right, market was down and below, it transitioned up and above here. There's your pullback and your hold above. So ultimately, that's that. We'll look to be more bearish trend if we're below, and we'll look for that. But otherwise, it's just kind of up. Now, so that's the basics, right? That's pretty much what the market is doing always and forever. But I believe the YouTube video or YouTube title this morning says something about mixed signals, or maybe that was the thumbnail. But we do have some kind of mixed signals right now going on in the market, which is we've had two back-to-back crosses in a short period of time. So we have this move here, which is a transition. That's a cross down, which would be seen as a bearish cross, if you will. But I don't, bearish cross, right? And then 2 days later, look at the market up. So that's what I mean. I'm not necessarily trying to tell you it's a bearish cross. And I mean, I guess I did. But just because you see a moving average cross below another doesn't mean the market's just going to go that direction, right? As you can see here, we crossed and then popped right back up and then up, right? So just note that whenever you see the 10 SMA cross below the 50 SMA, like you're seeing here and here, right? That's a cross down and a cross up within like a day and a half, 2 days. Now, granted, this was off of FOMC, but just in general, when you start to see that, it already tells me, it just that alone tells me the market is more into a chop, confused environment for the time being that could last longer than you'd hope and or shorter than you might expect. So when you start to see those things, I become less optimistic on easy direction. I become less optimistic on easy flowing trending moves. So as we kind of go through today's stream and maybe for the next couple days, we're going to be, until we think, that there's more confidence in the market, more direction, then we're just going to be kind of meh, just figuring it out. When I say figuring it out, it's going to be not gung-ho in any direction for right now, all right? Because we're seeing we're seeing the signs of confusion. This is something that I use, right? I don't necessarily need to look at, I'm not looking at other indicators, not that I couldn't, not that I don't at times, but just simply when I see that two crosses, whether it be down, up, vice versa, up, down, this way, that, in a very short period of time, we generally find ourselves in a more of a confused trading environment, if you will. So I will arguably join in on that confusion, which is, and when I say confusion, it means just it's not as easy to trend the market, right? So those that would come into the market maybe looking for extreme, awesome, trending, ripping moves might be irritated because they're more likely to not get that environment. You're more likely to get an annoying environment. Now, as long as your bias is in line with that, then you'll sit back and it won't really matter because you're like, well, figured, right? So let's hope that the market does something great. My reality is that these next, well, it's Thursday, so maybe Thursday, Friday, we might do something stupid, just not easy. When I say easy, right, let's think back to when things are looking easy and do trade easy. All right, this is easy. Right, market goes, oh, sorry, 1 second. All right, this is easy, where market breaks down, move, counter, move, up, and then that's where it gets a little awkward. But ultimately, what's easy, right? Breaks below 50, goes, right? Breaks above 50, trends out. What we've been getting for, and a lot of people would call this chop, which it kind of is. But still, that chop was above the 50 and riding. And then we just had a little bit of a break, a back test, an attempt to go. FOMC pop up, false signal, false signal. Now, maybe we are going to kind of do some annoying chop movement for a bit, or continue to at least. So that's kind of what we're waiting on now, is a little more confidence and direction on the market. How that wants to shape up, don't know. Generally speaking, a lot of times it will come from the VIX. So we'll dial into the VIX here in just a second. Well, it's 9:28. We don't really have a whole lot of time. But I will just touch on it real quick. Alrighty. So the VIX, yes. So obviously you guys saw the VIX was elevated over the past couple days. So we always talk about this, right? Until the VIX starts to break out, we're not going to think the market's really going to go down. Let me actually increase the time on this. We're going to go back 20 days. We'll just go back to here. All right, so we know that the VIX has been in a downtrend. So when the VIX is in a downtrend, the market's usually not going to pull back anything super aggressive. And then what you guys just saw was the VIX pop up and start to go over trend. Now you may say, Connor, well, the market didn't really pull back. It kind of had some pulling back, but not much over the past day or 2 or 3 days. All right, but that's really just the volatility index going up because we know that FOMC was going to happen. So this is how the market was hedging, arguably, pricing in volatility to come with CPI, or sorry, not CPI, FOMC. So all the VIX increase over this past week was in anticipation and or in the know that FOMC was happening, right? FOMC tends to be a volatility announcement, and volatility happens around that. So all we saw was the VIX increase due to everyone knowing that FOMC is coming, and as a result, it usually has a volatile move, and as a result, the market already knows that, so the market's pricing it, et cetera, et cetera, et cetera, right? So now we have taken what? We've taken the VIX back below. So that means for the moment, FOMC has been done. The market's not really fearful. The announcement came. It didn't take the market down. It actually pushed the market up. So the VIX ended up doing what? Giving up the volatility structure here at 1647. If we can reclaim that, whether it be now, later, 5 days from now, don't know, then we'll look to express fear back into the market and be more bearish in the immediate on your equities markets like that. All right. So we'll just double check the VVIX. All right. So this is something that's kind of important, is because, and I don't know, I gotta wait and see what it looks like at the open, which is another. Well, I have to wait and see what this chart looks like. But what we do know is that hedging. Hedging for tailwind risk was taking place in the market. So if the VIX is broken down, but VVIX is not, it could tell us that there's still some fear that smarter players are prepping for. So I'm curious to see how this opens today and how this trades a bit, because this could give us, see how the VVIX hasn't actually broken down the 50 SMA? That tells us the market is still a little nervous because smarter players are still hedging volatility, even though the VIX is down. So 1 second, let's do this. We gotta put this VVIX and we're gonna make this VIX. All right, so if you look, right, so if we increase this chart real quick, so you can see VIX has broken down, right? So the expression of fear has been removed from the market. But if you look at VVIX, the anticipation of volatility is still up and positive. So this tells us that people that hedge volatility and are a little smarter than your average are still uncertain, kind of like myself. I don't say I'm that smart, but as you can see, I'm not really crazy long bias, not really crazy short bias. There's some mixed signaling going on. We're getting back-to-back false crosses. It's just the market, it's a little uncertain, right? So when we come and look at volatility is kind of saying the same thing, which is we still have hedging of volatility going on, even though there's no expression of fear right now. So the market, if we go look, shouldn't be going like down or anything. Hold on, I haven't actually looked at it since the open. All right, so not that it shouldn't be going down, but ultimately, the market isn't super scared right now. For the markets to be really scared, they would have to be above this yellow line. That would be the true expression of fear into the market. And at that point, we'd assume that the market has pulled back, maybe even throwing the markets down a bit. So until the VIX is actually breaking out, we're not going to see real fear for the time being. You know what I mean? And when I say fear, that just means, generally markets trading downwards or being more bearish, But yeah, so but like I said, this is kind of where my brain's at though, is as long as the VVIX is staying elevated, I assume the markets are actually going to pull back a bit. And what we'd end up looking for first, is this breakdown doesn't have a back test. So it's kind of one of those scenarios where if what's going on with the VVIX is true, we then assume the VIX is going to go up and we're going to go back to 1649. And then the market will have to decide if the VIX wants to lower high below or if it actually wants to break out, and we do express fear into the market. So like I said, it's just common to see the VIX kind of trade back and forth around the 50 SMA. It doesn't have to, obviously, but just like anything, right? Look at the last downtrend, right? So look at this. This one broke, pretty much back tested there. It could have been the after hours down, and then eventually back test here, right? And so on and so forth. And it does it multiple times, right? Back test here, down, back test, down, back test, down, back test, down, back test, break over on FOMC, right? And what you have here is, eventually another back test during FOMC, break down. Now, either it has to just keep staying bearish, or it's going to do what? It's going to go back test and then stay bearish, or it's going to break out and express fear. Again, there's only two options for markets to go, and it's either up or down, always and forever. And so, as long as you can kind of find those somewhat reputable backtest levels, you can get a decent idea of how something might move and trade, etc. Whoa. All right, so when we go look at the market today, actually we have a gap down. I wonder if we're gonna do a gap, our fib. Well, let's see if we do the gap down fib today. See, right now you can see how the market's just barely holding over, not barely, but it's over the 50 SMA, right? So you can see why we're like not actually bearish, you know what I mean? Because look, the market's over the 50 SMA right there. So this is what we saw this morning is really just this. It's just a gap down / back test of the 50 SMA support, and I'll just make that a yellow line. Man, I suck right now. I guess that's what happens when you have a couple days off from streaming and clicking some buttons. Oh my lord, this computer. It's really just a user error, but I like to blame my computer. So yeah, just this yellow line, that's the 50 SMA. So you can pretty much see exactly why we've brought the market here, and the algorithm held it right there. Just in real time, computers aren't willing to let the markets down for the moment. Doesn't mean that that's going to be the case for forever. It's just what's happening, right? In real time, computers and people that control the market, which is really not you or me, computers and what have you, just were like, no, we're just going to hold it for the time being. So we're just not bearish the market right now. It's not yet, at least. That's pretty much it. There was one good penny stock this morning. It was BTTC. I tried to get some shares long at like 5 something. It was like 545. Yeah, I try to get some shares along like 520s, 530s, but then no fills. So then I'm like, whatever. And sure enough, it was a good one, which is usually how it goes. If you don't, get your fills on a stock, they usually are going to move it higher. It's kind of the nature of the game. But anyways, so yeah, we're just kind of chilling, slightly long bias the market, and that's it. And the reason I say slightly long bias is because that's just the reality. The market is still over the 50 SMA. The VIX hasn't broken out fear. The market hasn't broken down. So we're not supposed to expect the markets to just go down. Right? They are currently on the positive side, right? So if we look at the SPY real quick too. All right, so let's look at this. So we're all clear. All right, so look at the 50 SMA. Yesterday, the market on this candle, actually, let me, the market here pushed up, pulled back to it and down below, right? So it back tested and went below, so that's a new break here on this candle. Break has no back test. There's your back test, right? Now, it doesn't always have to do that, but, again, like we said before, algorithms and computers and what have you really control the market. So what we're going to do is we're going to add a little, that's funny, it's not, that's goofy. Maybe it's because this is behind it, maybe. I don't know what that is. Yeah, we're going to add our little handy dandy yellow line there. And now we're going to zoom into the chart. And so you see since pre-market, right? Well, just in general, right? We broke out yesterday. We, in theory, back tested it, but then down below, back test, break over, pull back, back test, hold, bounce, right? So that's an attempted higher low. We're going to attempted hold above the 50 SMA. And only if we're really below it are we going to think that the market's trying to shift down. All right. Go look at a 1 minute chart. We know that the market held down here. So this is a 1 minute volume weighted average price of the 50 SMA hold. So that tells us that the current 1 minute VWAP support trend of the market's right about there, which also becomes a pullback target, as you're pretty much seeing. So just in general, anyone, any computer, whatever, what have you, that's bidding the market long at these lows, which is just above the 50 SMA, we're holding support, we pulled back, kind of held support. If we start to get below this VWAP structure, that's where I get a little bit more nervous of the immediate price action of the market. And we'd assume that then pulls back to the 50 SMA. Hopefully all this makes sense. Again, these are all the strategies that I know, that I've built and trained my brain to see over the years and when and why to implement them. So I wouldn't expect anyone to really know half the stuff I say right off the top of my head, or your head for that matter, when I'm saying it. That's why I try to do my best to make it simple. So, which is why I draw these little cute pictures. So this is our VWAP trend. This is the VWAP zone / target trend. If we go below that, that's where we're more likely to do a move like this to there. Again, not really sold on the market. When I say sold on the market one way or the other, right? And what I mean by that is, yes, we're still on the positive side of the market. In theory, the market is bullish in that regard, right? Being over a specific level. This is like if the long fails, right? If me, you, whoever, whatever, is positive and bullish because the market's over the 50 SMA, if it fails, this is generally going to be the ebb and flow of the market. And the reason I know that is because I've been involved in longs like this that then not work, and then what's the result? What I've drawn on the screen. And the pattern generally repeats over and over and over and over to some degree. So there's the pullback. So we pull back into that green box that's drawn on the screen. It's actually a little off now, but you can see how we've pulled it back into that box and it just bounced right out. And we did not move all the way down as this arrow is drawn. That's fine. That's okay. That's why, because we've already told you. The market is positive over the yellow line, right? So we're over the yellow. We held support, arguably. That's all this bouncing. And the volume weighted average price trend is the box and or these VWAPs. This is the volume weighted average price. Oh my gosh. I'm clicking the right thing. It just, see, like I'm right on the horizontal tool, clicking in the middle, and it's highlighting the one on the left. It's ridiculous. But anyways. So, yeah, we have the volume weighted average price trends here. All right. See, that's why we're showing that box there, because that's it. So that's just the 1 minute 50 SMA volume weighted average price trend. If we're not below that, we're not going to scare longs out of position and cause what you see here on the screen with that arrow, right? So I guess the better way of drawing it too maybe is that it's pretty much like that. It's, oh my lord, TradingView is so lame right now. So it's like this. Super duper busy day here, ladies and gentlemen, boys and squirrels. Alright, real quick, let's go look at the volatility index. Is the volatility index above 1648? No. Then we're not expressing fear into the market. If we're not expressing fear into the market, we're less likely to see harsh pulling back and harsh selling off of the stock market. People are not fearful. Let's check VVIX. VVIX is positive. So smarter players are still uncertain. They're not sold that this is a great long. So that means this isn't a great long. Yet. Alright. So you can see what's happened. Let me delete this. The market is now pulled back to the VWAP box as we discussed. Which means this scenario now becomes on deck again as you're on that support level, right? And if you break it down, etc. All right, so currently, computers, smarter people, if you will, I don't know, still holding VWAP support here. No big deal. We'll throw a volume weighted average price on the high of this move. This is now going to become a 1 minute volume weighted average price trend that the market will backtest in some fashion or another. Whether we bounce the market here and just run it right back up, or we break the market down and use it as a rolling resistance point later. Now, do remember, right? What did we say this morning? Kind of into the open, before the open, something like that. That you would expect what? More of a choppier, harder trading environment. Granted, I can't really say that so far what we've gotten is choppy on the shorter term, but if just in general, the overall scope of the market, if you go back a couple days, yay! Job well done, team. You just predicted the largest globally traded ETF in the world again. So there's the market moving down to the 684 price as we suggested it would if you took out the intraday 1 minute support trend. Why? Because that's just what happens. So that is part of strategy and development that I've created over the years. You can use it however you see fit. I'm just here to share and have fun. So that's that. Now, what's happening right now in real time is computers are talking to themselves. They're going, oh snap, we're on the 50 SMA. Are we going to hold it or are we going to break it down? Are we going to hold it or are we going to break it down? Are we going to hold it or are we going to break it down, etc. Remember, we said the VVIX was still positive. That means the market is uncertain of the long. Now let's go back to the VIX. Since we're now pulling the market down, the VIX is creeping up, and computers are still looking at that 1648. If we break the SPY down below the 50 SMA, which we're kind of starting to do, and it gets some acceptance, you will see the volatility index go up to $16.47. And it's about to happen because I said that. It's just going to happen. So, or well, I hate to be super, I hate being, because it's so, but the reality is this is how algorithms think. We just need another like little red blippy candle and we should see VIX go up to 1647. Oh, don't be lame. But either way, I mean, these are your two options right now. The market's going to back test here. Oh, snap. Sorry, TradingView's doing that dumb stuff here. So the market really has two options, right? It's going to either go down, or it's going to back test where? Here, right? And if it keeps going down, what's going to happen? The VIX is going to go to 1647, right? The only way VIX doesn't hit 1647 is the market has to stop going down and go for the back test of the 50 SMA, which it just broke down. So what now? We are now not long biased the stock market, just in general. Why? Because the market is not positive. So as we said this morning, right? If the market is above, then the market is on the positive side. You saw the pullback, you saw the attempt to hold and bounce. And now what? Now the long failed. We've come down to the 50 SMA. We've now broken the 50 SMA, down. Volatility, down. Because why? Because market is below. Now you're seeing VIX increase, so fear's kind of coming into the market. It hasn't truly been expressed yet because we haven't broken out the VIX. But we do know the market is now negative. And we obviously talked this morning a little bit before the market opened. And we mentioned what? We've had two back-to-back false crosses in a short period of time. By the way, you see how VIX... So look at... Wait. This could be where you see a scalp long on the market because the VIX is coming into the 50 SMA. So if the VIX ends up holding resistance, then the computers in the market will use this for a bounce spot. I would be a little skeptical of it just because of... I don't know. I don't feel great about this VIX rejection, but... that's still what can very well happen. As long as the computers and the people that control the market want that, then that's what's going to happen, right? But like I said, I don't feel great about a VIX rejection here. But either way, we'll see. One other thing I got to do is the breakdown was probably about there, right? Something like that. So we should expect we're going to get a back test to about there. Yeah, this is our back test location anywhere into that green box. Kind of already close to happening there, but anyways. Yeah, so that's a bunch of information. Hopefully you guys understand that. That's all that's going on. So yeah, market's now on the negative side, but we would really need the volatility index to break out here to confirm and continue the drop on the market. Right? All we have right now is price action on the stock market dipping below an algorithmic level that can shift the market making structure in the market to down. But we don't yet have full confirmation and fearfulness yet being expressed on the volatility index. But we're kind of getting there, or maybe trying to. And then this arguably is a no, okay. And we have a triple here. So, yeah, there we go. That's one. Wait, did I do that right? I think so. Hold on, I'm tripping. What is wrong with me? Oh, that's right. Yeah. There goes our 161 target of some stuff. No GPs. Okay, you can see the VIX is now. So remember, right, this all started because of what? Remember the storyline. We started this morning with the storyline. We said what? The VVIX, there is still hedging of volatility. The smarter people in the market are saying, you know what? We're not sold on this long move. I know the volatility index may not be saying that the market's going down and saying that the market's fearful right now, but there's still some hedging and some tailwind risk in the market and uncertainty. Though the uncertainty isn't being expressed right now, we're trying to say, hey, pay attention. So that's why this morning I'm like, we're not really super directional bias right now, because there's too much uncertainty, right? That's why just because the market is on the positive side doesn't mean it's a great long, right? There's too much uncertainty. There's hedging of volatility. It's just a matter of whether or not the hedging of volatility is correct. And so far, they're very much so correct. Why? Because smarter players usually are correct. And we can see that so far today. They did not stop hedging for volatility, and so far this morning, market popped up a little bit and just got whacked, right? So it's still, we're in this very uncertain market, if you will. And again, a lot of times that can be identified by two back-to-back false crosses on the market. All right, so let's go dial into the VIX a little more. You can see we popped up. So this is the 50 SMA, right? So as we said, the market would arguably go for a back test of the 50 SMA. That's the back test. This is your 1 minute breakout attempt. This is your 1 minute algorithmic pullback, right? So it's all about whether or not this thing holds above in the immediate. If so, markets are probably going to continue down. If we end up getting a lower high something and breaking this down here, then the markets goes into a bounce. So it just depends on how the VIX wants to shape up here and what the market wants to do. But we're right on a very important level for the volatility index. With it sustaining above, it can further the market sell-off. As we start to express more fear into the market, this drop, the more it goes down, the more aggressive it looks, the more scared people get, the more we express fear, etc. Again, this is a repeating pattern, ongoing, will happen for the end of time. So do remember, right, like this whole, like pretty much this box that's on the screen, I should just make that. Well, it'll keep updating, but yeah, pretty much this green box I'm moving, the entire market is bearish below that for now. Until the markets recover that, we're not even really concerned about anything major bouncing. And it's just everything, any bounce that happened is just it's a counter bounce. And we'd only think the market's going to do something crazy if it were actually like this, like above. It would have to be above. Otherwise, we just see this as a bounce back to and down. So that's how the market would now be structured, right? Is we've broken down and the markets can bounce arguably even to here and stay down, and or that's the transition point back up. So that's how your markets are now structured. On that note, I am gonna go get a coffee. But yeah, so I'll just leave that on because that's fine. And then let's go look at one more thing I'm gonna do before we go. I gotta look. Okay, yeah, I'll be back. Alrighty, I am back on here. Surprised, there's just no one talking in the chat. What are they on? What are they on? Alright, we're going to delete those beautiful little random yellow lines off. You guys already know that, so should be good. Should be good. Yep. Okay. A couple other little random pieces of info. You're kind of expecting there be some sort of correction and bear market into 2026. Obviously, we're about halfway through December right now, so won't be long if we get proven an idiot or proven correct. I really hope we don't go into a correction or a bear market. That would be much better, but you know, might be time. Market getting ready to go back to pretty much the box on the screen because it's just pretty much what happens. Bitcoin down a bit. Just pretty much, trading back and forth to volume weighted average prices right now. So this is our current Bitcoin over under. Now we can start putting some, actually I should probably double check this low guy too. And here. All right, market has now made it back to the 1 minute 50 SMA volume weighted average price of the market, arguably trying to get back towards even here to as high as the yellow. Yeah, like we said, it's gonna come down a lot to this VIX here, right? And what this VIX does, which is basically if it doesn't break and go, and it ends up getting a rejection. Alright, so you can see, what do? If you want to, you could even draw a cute little bull flag there, up to 50 SMA, long target back test, breakout, 1 minute pull back, 1 minute attempt to go, reset, and if we break this down like so, then we should end up bouncing the SPY, and the SPY could arguably go back to as high as here. We just hit our next target up on the micro because, again, that's just what happens. It's just a big old ebb and flowing game. Okay, well, I'm going to go ahead and take that off. Well, no, I'm just going to make it down. So, yep, now you're pretty much going to be looking at, well, not now, but it's either the market's going to go back test where the arrow's pointed to, or we're eventually going to catch some bids and resistance and then pull the market back to a higher low. So now it's going to be, I'm just going to do that. I'm just going to take this off. And now we're going to move this up like that. And that becomes the long target destination, and or vice versa. Arguably, this low point here would be your kind of higher low development. That's not entirely true because we have a nice abrupt move here, so it'd really be like here to here currently. Would you just go up to where I pointed the arrow to already, make everyone's life easy, and we can always giggle about it in a second? Yay! Come on, so close, so close. You can do it. You can do it. Alright, so we'll just say that pretty much that's all done. Remember what we said? It was all up to the VIX. The VIX needed to sustain the breakout. It needed to sustain the breakout, right? And what did it do? Not sustain the breakout. So what are we going to do? We're going to take the market back to the 50 SMA, which is what we just did. And that is some beautiful foresight analysis right there. I mean, golly. Get this man a sucker. Actually, get him a participation sticker. So, job well done. Now it's up to the market. Now it's not the VIX anymore. Now we're watching the market. Now the market has to decide. Does it want to break out and go back positive, or does it want to reject? Right? Now the attention is kind of back focused on the SPY. So see how the market kind of popped there real aggressively? So that's some computers, some algos, and some retail arguably stopping out a little bit because, trends arguably over the SMA. But anyways, so yeah, that's that. Job well done, team. Job well done. We still have no test of any of this volume weighted average price stuff, so I would assume at some point, well, not at some point, just these would be the current pullback targets right now to oh gosh, trading view is so lame. Man, these are our current pullback targets at some point in time. That's how I'd read the market now. In the event, I mean, the market basically there's two options, really, in my opinion. It's the market has to do this, or it's down to these levels that we have drawn out. Unless a fake lower high or higher low gets reestablished. And actually, I wouldn't even really necessarily draw the arrows up. I mean, it's always it's only one of two things. Market will only go up or go down, but it's like we would have to sustain here, or it would be. So there's two. It's like this, and then. So those are your points of interest, if you will. So your first point, the market's on, right? So if the market's going to hold 50 SMA and go, it'd have to do it right here, right? Otherwise, if it fails 50 SMA, which we're just slightly under, then we're going to drop out to pretty much where that arrow says. If you fail this, and et cetera, et cetera, et cetera. You get the point. But we'll just try to keep it a little bit more simple than that. Whoa, we don't want to do that. Busy day, busy day, busy day. Let me check my phone. I have a delivery for a washer and dryer coming today. So there's that easy pullback 1 minute hold over 50 SMA, as we kind of already discussed. Alright, so let's just kind of peek back into Bitcoin. Bitcoin not really doing anything too crazy. Yeah, I kind of forgot. Nah, I forgot, but I mean, I did kind of forget. Remember we talked about, the gap down. So what do we always expect on a gap down or a gap up if we get a gap and go? We expect it to go to the 161 destination of the overnight gap. So if you look at the gap, right? So here's your overnight gap from the open to the close and 161 down. All right, what's market do? Gap down goes 161, a little below, and there's your somewhat easy destination for a gap. We completed that today, not bad. We in the short term have shifted the market down, then we shifted the market back over 50. Oh, TradingView is getting so annoying today. I'm gonna hopefully tomorrow. That's better. We'll see. Like we said, guys, we're kind of in the we're at the point where we're trying to get the market to really decide what it wants to do. And when I said there was mixed signals, I mean, I told you there was going to be mixed signals, right? So what have we done today? We started with what? We started with an up move, slam down, slam up. And then if you look back for the past couple days, I mean, arguably, what do you got? Down. Oh my gosh, TradingView is so lame. Again, you have down move, up move, down move, up move, and then you have down move, up move today. So we're just in the waiting for the markets to pretty much figure themselves out fully. Now, again, like I said, a lot of people today are going to be somewhat annoyed probably of price action, but I'd say we've pretty much been perfectly on top of it. And it all starts from what? It all starts from this point right here. Dang it. That yellow line. That's how we pretty much determine most of this price action day. One line. If above, it's bullish. If below, it's bearish. If above, it's bullish. And every move, whether it be up or down, can fail. And if they fail, it always reverts back to that price to then dictate if it wants to go up again or stay down. It's the control point. Some would call it VPOC, but it's probably not. And actually, that raises a good question. I should take a look at something I've been kind of forgetting to take a peek at. Should go back to here. This guy. There. Yeah. So from the last buy signal, I mean, this is the volume point of control. This is the largest volume zone. Which basically, so if we look back at from when the buy signal started, right? If we look back here, right, we said be long here, long, long, long. Most people didn't really, I mean, in general, right, from here to here, most people have involved themselves here, right? Well, and that's because where most of the trading days have taken place, so obviously volume would be accumulated there. But, you know, that's... But if, again, it's just using that look back, you can basically see there's just more people trapped in this area, less people involved there. That's, again, where we said you should be getting along here. Well, you should be doing whatever you want to do. Don't listen to me. And, you know, so yeah, let's check a couple other... well, there's really nothing else to check. I mean, I was going to try to use this on some of these other areas, but I just think the market's too chopped that it's not going to really do us any good, because if I put it there, it's just going to give us... That is actually kind of interesting. What about if I do it? Because that would be it. Well, it'll probably be on the downside anyway. It'll just be the same thing. If I put it here on this candle. That's kind of interesting. Well, that would be FOMC, so duh. And then what about... So, that's not going to do us any good, but we'll see. I don't think, at least. What if I did it on this candle? So most people bought the highs. That's funny. Yeah, makes sense now. Yeah, if we were to go from the first candle of the day, it would tell us that most people have interacted. Most volume was there. All right. Oh my gosh. Trading view. Like, get it together. So based off the current, actually, let's just see if I do it on a 1 minute. But that was a 30 minute. Should be the same though, because same day. No, it's not. That's interesting. But nonetheless, I do like to use the anchored volume profile on top of the system because that gives me a good idea of things, if you will. You can only use, it's probably only viable going back one signal because like if I were to go here, you know, it's not legit because yeah, just listen to what I'm saying, which is if you're going to use anchored volume weighted profile, it has to be to the most recent. The most recent would be back down here, and then all of this is, I would just call this nonsense that you can't really anchor to for the time being. Wait, what? Oh, snap. Okay. Dang. I got floors being delivered today, too. Thought it was just going to be the washer and dryer. That's crazy. Oh, boy. Well, this day's workload has got a lot bigger. Sweet. Man. So let's bring back the VIX. So you see how, so now let's just kind of go back and review the volatility index. Oh, also by the way, so like look at now, right? You see how the market's kind of blowing up right now a little bit, kind of doing relatively well. What do we notice, right? So now not only is the volatility index not performing, but VVIX is no longer performing. So the people that were initially hedging for downside risk on the market today, they're slowly removing that bet a little bit. They're still hedged because the market is positive, if you will, but they're removing that bet a little bit. So the markets are getting a little bit more optimistic, you could say, hence this long, kind of pressing up. And then obviously, if you look at the volatility index, what do we notice from the volatility index? So really all today was a back test of the 50 SMA and down, right? So what do we say? remember this morning I said, hey guys, look, it has no back test. So what ended up happening, right? Market ended up doing what? Back testing and staying bearish with a momentary moment where we're like, is it going to break out and turn into a rip and send the market down? Or is it going to be a false breakout and go back down under and the market goes back into a long? Well, it picked the down, back, and under, and the market blows back up into a long. As a result, those that are hedging for tailwind risk in the market are less scared. So they're taking those bets off. Market's getting blasted up into a long. Blah, 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 blah. Yada, yada, yada. Again, like I said, as far as I'm concerned, I'm pretty much bullish going into the holiday season. For me, I'm pretty much, as far as my bias and my thoughts, the reality is I think the markets are going to be fine. When I say fine, I mean I think we're regardless of any little sell off we may see below the 50 SMA, I think all those dips are going to get bought pretty quickly, leading into Christmas and leading into the holiday season. It's been so long since I've really seen anything bad near the holidays. Maybe one day it changes, but Thanksgiving, Christmas, Easter, any day where the markets are having any holiday, it always seems the market's bullish. So I'm just not gonna think we're gonna have some catastrophic pullback on the market leading into Christmas. And if we do, then whatever, okay. But yeah, so I just would assume that we're pretty much going to be long bias leading into Christmas. We're going to have a Santa rally as we normally do. Yeah, so I was kind of hoping we get a little bit more of a pullback before Christmas, but I mean, heck, it's only a couple weeks away at this point. What, 2 weeks? Yeah, 2 weeks. So I don't know. I don't see us maybe getting a catastrophic pullback before then. We'll see though. And if we do, I'm probably gonna be buying that dip more aggressively, but I just think they're gonna keep grinding it, chopping it, and then maybe we'll blow it up into Christmas. And sometime after Christmas we'll get a drop. I myself have just got some small positions on the UPRO. Not a lot of money on that one. Basically just because, as I said before, there's kind of a lot of mixed signals, so couldn't really be super long bias, but just enough to appease my appetite, if you will. Oh boy. Oh my goodness. What a crazy day. Just absolutely crazy. Oh yeah, I guess that could be kind of boring. Hold on, ladies and gentlemen. I'll be right back. Don't. Well, yeah, I'll be right back. Oh, actually, you know what? Before I go, I gotta do something on the computer for you guys. I kind of forgot. My bad, yo. Um, in case I forget, sometimes I'm on stream or whatever because I do a bunch of other stuff too. I'm either looking at emails, answering questions, and going through different various portfolios. Um, just know that any time you cross the 50 SMA, you bounce it, you break above it. We literally repeat the same strategy. So remember earlier we had the VWAP and we're kind of anchored on these lows because we would just call that a bounce at the 50, right? We would do the same thing here when we broke down, which I did do. All right, so we kind of broke down 50 SMA there. We tracked that VWAP. All right, well now we just broke back over the 50 SMA, so obviously you'd anchor VWAP here on the break / the back test, so it'd be like a VWAP here and a VWAP here. Oh, sorry. And we would call this what? The 1 minute 50 SMA volume weighted average price, which basically says if the market breaks over, well, that's not really break, if the market breaks over, right? You look for support into the 1 minute VWAP. There's your 1 minute VWAP rallying out. Okay. Our next 1 minute VWAP support would basically be like right here. But just in general, this now becomes the current 1 minute volume weighted average price support trend for the current session as it sits right now. So those are all your pullback targets and current support over unders. So the way the market would now work is pulling back into here and up, pulling back down as low as here and up, and only if we really get below here will we look for that drop to there. So it becomes the same setup as it was this morning. So it's just a repeat. So remember this morning how we basically, again, we had the VWAPs, they're all anchored, and we basically said, hey guys, it's either gonna hold and go up or we're gonna drop out too, here. We had it drawn earlier like that. So it becomes the same thing, just a little bit bigger scale. I'll be back. Okay, I'm back on here. Yeah, I was gonna say I didn't really see any great penny stocks today. Actually, this one kind of did okay, but kind of interesting. Yeah. Alrighty. So, as you can see, we've pulled the market back down into said pullback levels. Why? Just because that's just what happens. Oh boy. Well, we got to bring that up a little bit, just like that. Or wait, well, just in general. What's our friend Bitcoin doing? Not doing a whole lot. You know, I've been seeing. Excuse me. I've been seeing a few articles on the internet recently about how, I don't know, maybe the Bitcoin 4-year cycles have ended. Maybe they have. So far, I would say this one's honestly performing same as every single kind of past one so far. I don't know. Maybe they change, maybe they don't. Who knows? But so far, this is rhyming very, very similar to past cycles. So we'll see. I mean, like I said, it's time will tell. It always does. I mean, honestly, for a Santa rally, the best thing that could honestly happen is the market go down. Um, I mean, I kind of have my fingers crossed we get a bigger pullback, but I don't know if it's gonna happen. I just don't know. That's, something we always kind of talk about is that the best longs in the market always start from when the trend just starts to change. That's generally when you get your best force grind moves where algorithms are really doing the force up plays. So right there, right? That's where you're generally going to get your best forced algorithmic long presses, right? And so if we think about where we're at now in the market, right? We had a long operation, back test, attempted continuation, then pull back, break 50, lower high 50, FOMC pop, then give back all the gains, then bounce, etc. So we're starting to get in this kind of somewhat consolidating chop back and forth, right? For a new long, at this point, the market is now going to have to just continue, or it would have to reset, create a new buying environment, and then rally the market back into a new long, right? Or something like that. So it would be, in my opinion, a little easier if we got a dropout and reset the market some. Let's check the 1 hour. Yeah, I mean, we're still positive on the 1 hour. So that's another thing, too, is generally we don't see big pullbacks on the market until both the 30-minute and the 1 hour trend give up. And the market's still kind of holding that 1 hour trend. So we would need that to break down, too. So we're just not quite there yet. Well, alrighty. It's been a beautiful stream with like 4 or 5 of you guys all day. I think we did a fantastic job at predicting the stock market once again. Hopefully it helped. Hope you learned something new. Again, all the systems that we kind of do here on the stream are all what I feel are repeatable, ongoing, somewhat never-ending systems. So feel free, teach yourself them, have fun, enjoy your day, and I'll catch you guys back tomorrow morning. Cheers.